Every year, everything seems to get more expensive. Food, housing, gas, even your morning coffee. We call it inflation. But what really causes prices to rise? And if inflation is just too much money, why can't governments simply print less of it? Today, we'll break down how inflation actually works, from the money in your wallet to the global system that decides what it's worth. Section 1. What inflation actually means. When people hear the word inflation, they usually think prices are going up. But in reality, inflation means the value of money is going down. If you could buy a loaf of bread for $1 last year and now it costs $1.10, that doesn't mean the bread became more valuable. It means your dollar lost some of its power to buy. So inflation isn't about prices, it's about purchasing power. What your money can actually get you. Economists measure it using the Consumer Price Index, or CPI. It tracks how the average cost of daily goods changes over time: food, rent, energy, healthcare, and more. Section 2. Why inflation happens. There are three main types of inflation. Number 1. Demand pull, inflation. When people have more money, they buy more. If companies can't produce enough to meet that demand, prices rise. It's simple supply and demand. Number 2. Cost, push inflation. When it costs more to make products, businesses raise prices to protect their profit. If energy or transport costs rise, that extra cost passes to you. Number 3. Built-in inflation. When people expect prices to rise, they ask for higher wages. But when wages go up, companies raise prices again to cover those costs. It becomes a repeating loop. Demand, supply, and expectations. These three forces constantly shape how fast money loses value. Section 3. The role of money supply. You've probably heard people say, inflation happens because governments print too much money. That's only half true. If money grows faster than the economy can produce goods, each unit of currency becomes worth less. But just printing money doesn't always create inflation. After the 2008 financial crisis, the U.S. Federal Reserve created trillions of dollars. Yet inflation stayed low, because that money didn't move much. Banks held it, and consumers didn't spend it. Inflation happens when money starts circulating, when people spend, not just when it's created. Section 4. The Central Banks Balancing Act. Central banks like the Federal Reserve or the European Central Bank try to keep inflation around 2% per year. They control this mainly through interest rates. When inflation is too high, they raise rates. Borrowing becomes expensive, people spend less, and the economy cools down. When inflation is too low or during recessions, they lower rates to encourage spending and investment. But it's a tightrope walk. Raise rates too high and you risk unemployment and stagnation. Keep them too low and prices spiral out of control. Section 5. Real-world examples. Let's look at two extreme cases. First, Zimbabwe, 2008. The government printed massive amounts of money to pay debts. Prices doubled almost daily. Inflation reached 79 billion%. People used wheelbarrows of cash to buy bread. Second, Japan since the 1990s. Japan faced the opposite, deflation. Prices fell for decades. People delayed buying things, expecting them to get cheaper, which slowed the economy even more. Both extremes show why stable inflation matters, not zero, not runaway. Just steady, controlled growth. Section 6. Inflation today. Recently, global inflation surged again. Supply chain shocks, energy crises, and pandemic stimulus all played a part. 2022 and 23 brought the highest inflation in over 40 years. Governments raised interest rates sharply to fight it. Now we're seeing slower growth, but gradually prices are stabilizing. Outro. Inflation is complex. It's not just money printing or greedy corporations. It's the result of millions of choices, from workers, producers, consumers, and the central banks that connect them. Next time prices rise, remember, what's really changing is not the value of things, but the value of money itself. If you found this breakdown useful, help this channel grow. Like, subscribe, and share this video with someone who still thinks inflation just means prices going up.